Guys, welcome to today's video. And what I'm going to do is I'm going to analyze hello. So what we're going to do is backtest the previous week data. It's some few hours to market open on this week. But what we're going to do is we're going to backtest the previous week and look at the entries, the possible entries that we could have taken right in the New York session. Okay, so the way forward I'm talking about here is that I'm going to live stream every day for the next 20 days for 6 hours plus. I'm going to live stream for 6 hours plus every day. Either if it's New York session, London session or Asian session, but I must stream for 6 hours daily. If I miss the New York session, I will stream for the during the Asian session. If I miss the Asian session, I'll stream over during the London session. Yeah, so that I want to, and I'll be trading a funded account. If I don't have a funded account, I'll be trading using the $50 account from the Just Market demo accounts. Yeah, this is just to build confidence, to familiarize myself with the charts and execution. Okay, so I have good resources and I just want to utilize it very nicely. So I want us to backtest what's up, what's been happening. So typically or technically, AUR USD is bearish. The Euro USD is bearish. As you can see, it has been falling down since we broke this low here and we got a body closure. We expected it to retrace. So what we know is that USD on the coming week maybe will be coming to form another lower low so that we start also retracing back. So the zone available here is here. You can see that maybe you can liquidate that one to tap into the zone. So these zones are where we expect prices to expect prices to tap and retrace in the future. Right? Yeah, so maybe on the coming week, maybe it will come down to this zone. Maybe these coming months, then also start retracing back, going higher, right? So maybe again it will come down. This is the daily time frame. Close above, come down. This will be our third swing. Come down, form a fourth swing. Maybe tap back into these zones around here because you can see that price maybe was tapping the 50% off. This is the 50%. So if price actually wants to continue downwards to these zones, to these those here, what it will do is we'll see if price will respect this zone. So I'm expecting price to tap something here. Then let's trace back. If this fails, you know that will come around this high to come and take this loss here. So that it will form another this high time frame zone. So that it will break here, tap back in, then form another swing here. Yeah. That is on high time frame perspective. This is on daily time frame, right? Yeah, but this is probably the high time frame, how I see it on the high time frame. But in this daily time frame, price is coming down smoothly. So we am expecting us to run this low here, then retrace back to this zone. As you can see that there is some small zone being formed, right? Yeah. So I have this one here. Yeah. So what do you expect on the coming days? So you see we have zones coming down, right? We have price coming down, and now let's back test becoming the previous zones. What happened before, right? So let me just remove these ones here. So up to now we have this first swing, second swing, third swing. So most probably price is going to retrace from here to the zone that maybe if it fails, maybe we go back to this height here, to this height here, so that we come around the low. But most probably the zone is going to hold so that you can run the loss around here. So price will reject from these lows to come back to the swing again, retrace back to the swing again, then fall down. Okay, but now let's backtest what happened from Monday last week. Right. So on Monday, did the New York session. Yeah. So from Monday, today is 21st. Yeah, 15 June. So let's into the 1 hour time frame. So from 8 a.m. to 4, this that is it. So what was happening actually, it was I'm a scalper and I'm trading with the 1 minute time frame. What I could have done here is see price was we were on a zone already. On a zone here. On a zone around here. Right. Yeah. We were on a zone. Mm, because this was swings coming down. So most probably see we go take FGs around here. That price could have been possible rejection point. So what we had is price going high, where price going high. This was not a valid swing. So we are here. So going to the 1 hour time frame, what could have I done is looking for potential 1 minute moves from ATM that see there is a swing on the 1 minute time frame and we are expecting price to retrace from here. Had it come down to the origin of the move. And what we had price because this was a swing. This was a swing coming down, right? Yeah, there was swings coming down. So we had to place. So this was break of structure, the break of structure. So we had this zone and this zone here. This swing here. So this was our second swing. This was our second swing. Yeah. So what do we do? It's 8 a.m. and I'm looking for entries. I'm looking for entries around here. So first I'll be here. I'll be here looking for confirmations to go high. And what will I be doing? I'll be trailing. Look, you will see this double. And what do? We skip some zones. We skip the 50%. So you see price and it coming down. So you see pressed up the 50%, went higher, and we had a zone around here. Right. So what do you want to see? You want to see is you want to see us break this, or what you want to see is look, we had a body closure around here. Then we had price tap back in. So most probably you were trading around here, maybe taking a long around here, this high. But it could have been a late move because you can see that we have really close above here. So what actually this would have mean is See that I had a body clasher here, here, yeah, here. So taking that trade from here and maybe to that high, my stop loss been here because these are flip on the this time frame. And that's a flip on this time frame. So it's a 4RR. So actually we didn't tap the 50%. So you see price went high. Price went high but didn't stay and we were stopped out here. So that could have been okay. That could have been okay. So the problem with these forex assets is the brokers have got very high um, not leverage but what is it called? Spreads. You can see if I had the limit order here, it could have been so hard so that it was triggered. So you need to open your orders. If you open orders with one click, if you open a buy entry here, it will reflect from there. So it's not favorable on people to trade the 1 minute time frame. But on the euro USD, it's not that big. But when you go to other assets, GGU, GJ, and so on, you'll see that margin it's so big. Okay. So you see, I could have lost a trade there in the 1 minute time frame. See, price went higher. What it did is from another low here. So what do you expect? Expect is to top back in here. So what do we have? So when we are going high, we know that we are on a high time frame area. We are on our time frame area, so we don't expect us to hold trades to go past that one. So we know that we understand that we are on a high time frame zone from the left, and say that we are taking this as scalp, right? Yeah. And say that we are taking this as scalp. That's what you know is on our, because this tab here could have been as this tab here. It's a high time frame tab, and if you have that risk tolerance, you can take a 1 to 1 from there somewhere down here. So this was look now this rounding here. Now you see from 8 to 9, 9 to 10 towards focus. The first trade could have been here. So it could have failed, then you see price coming down. So what do you do? We also form swings going here. This is our first swing. First swing there. You see price broke high. So you see price came down, tap back into this SND here. Price. So you see what do we do here? we have zones. So you see price coming down. So you don't want to be taking trades above. These are swings on the lower time frame. So you don't want to be coach. You don't want to be coach taking trades around the top of the rallies. So maybe wait for price to come down. So for me, maybe I could have taken maybe I want to one from here along because these are maybe small. May take some few trades around there because I'm going to skip this trade here because of this rounding here. This rounding here, and we are on high time frame area. So even I was expecting price that if pressed up back in, see, can sell around here. So this is a trade to 50% of stop losses. Let's build above here. Short. So what's the target of this trade? The target trade that's coming around this level here. Because that means that the rounding here is true and the zone here is weaker. Ten to 10 to 11, 11 to 12 is on money trading. So you see opportunities to enter trades. Maybe this could have been our first swing, second swing could have failed because and also this could have failed to close above this one, so making it equal highs around both lows. So we have this low here, big red. So you see, come down, need 1 minute trading. Come down, small. We ran it, sweep it, then let's see. You see price start back in here, start back into the zone. Yeah. What do we do? You see price run that now. Left one, two, 22. There. So what do you see here? Is that so you don't get an end. Why? Because the price is just ranging around here. So I see price run, that one. These are second time frame entries. Mm-hmm. We finally run that now. So we block structure on the 1 minute time frame or 15 minutes time frame and came down. So literally for years from 12 to 1, 1 to 2, this to 4 hours, we couldn't get a range. So if I could have came to these markets at 12 a.m. and New York time, I couldn't get an entry because and I couldn't force around here. I will try to force we'll get a lesser, lesser, we'll get a lesser RR or a negative RR. See, the price came down. We ran. So that's it. That's how Monday was it. So Tuesday, Tuesday, what did you hear on Tuesday? So from there, so I do understand on Tuesday. I understand that we broke structure on the time frame, but also we know that price is coming from a range. Yeah, we stop a range swing. So those people who are risk tolerant, you can take a trade from here. But I don't actually trade that one to one. One to one. You can swing it. Yeah. High time frames ones do work. See. But I don't trade that. I wait for confirmations to trade. See. Now prices coming down nicely, forming swings. So how do you know that yeah, swing here left hand mitigated? See, let's tap into it and see please continue coming. Now so I had this on top of the range. So what did we do? We had it and that looks okay. what do you see here? Mm, you see price. So from 8 a.m. we see price coming down steadily. Ahead, first swing, second swing, third swing, fourth swing, fifth swing. And what do we see? Yes, break of structure. Okay. Here, right? What do we do here? See price we gave you a nice swing. Right? There's a break of structure. Now what do you do? See, it didn't tap on zone. It didn't tap on zone here that you can see looking for zone. This is the probability, not even 30%. But we don't know what we're tapping from the left side. But we broke structure. I know that we are on a right angle. So what do you do is you're expecting the trend from here to come down. Totally. So our price is coming down here. Anyway, our entries here are just this highs. This. So what we do here is we go to our body closure here. So probably I could have taken this trade here. Probably after seeing this confirmation value. See, these are flip, body clash above, tabaking, sweep, confirmation, TP. Right. So you see, another problem is 10 to 12. See, price stop back into the zone below. You know that these are break of structure. So expecting price to tap back into here, then continue downwards. But what do you see? This price goes higher. What do you see? Here the body closure here. Most probably, most probably closing a trade around here. Now see, price is going high in this time frame. So Tuesday also couldn't have get or couldn't have not got any trade from 12 to 4. Yeah. So we break track here above 1 minute time frame. So what do we have? We have also below. So that is it for today.